that we have some upside, and again, we still have this beautiful bullish channel or pattern forming right here. We broke out of this little wedge pattern down here, so I do think that Bitcoin is kind of coiled here to make a move up. Now, yeah, so the initial statement was the 75 basis point hike, which we all expected, right? That was already priced into the market. The verbiage did change in the statement, and that was the key initially to why the markets took off to the upside. Basically, Jerome Powell said that they're going to take into account past rate hikes and how the lagging indicator or the lagging impact of it will affect the markets. And that was something new that wasn't in any past statements, which tells us that they are aware that these rate hikes that they've been hammering the market with take a while to be filtered through. So they don't want to overdo it and cause a collapse. Now, the S&P 500 just ripped higher. I don't know if we can show my screen here, but
certainly
we just ripped higher. I mean, you can see on that statement, just that alone. And then what's crazy is that
we're at 10-minute candles, right?
Yep, correct.
Okay.
10-minute candles. So this is intraday. So the initial reaction was one of huge emphasis and excitement. He's finally kind of toning it down. He's going to take care here. And then he came on the press conference and was still a little bit more on the hawkish side, maybe potentially still saying 50 basis points in December. And the markets didn't like that. And we've seen the markets come down very, very quickly. And what's crazy about this, right? I mean, it doesn't look super big, but these candles are massive. We're talking about, from this low here to this high, it's almost, it's basically 1.5% on the S&P, and then to down here, it's about 2%. So for the S&P, these are humongous moves. Maybe not in crypto, but for the S&P, it is humongous moves. Yeah, I mean, in general, it does to some extent. And what's interesting here is that we did see the initial pop on the Bitcoin chart, and we did see it come back in. But the one weird thing about crypto is it's been very muted in terms of the volatility, right? So we haven't seen, when the S&P's been dropping, 2-3% a day, crypto's actually held up relatively well. And today, again, you can see crypto, I mean, basically from where the statement started, we're essentially flat. I mean, maybe even slightly positive here. We're starting to get a little bit of a bounce up. So it is interesting to see how the crypto market has almost been the calm market. When you look at the currency markets, the stock market, the commodities market, it's actually been the chill market. Yeah, I think there's a small percentage of that. I also think that there's, because of the dollar's strength and the stress that it's been putting on the pound, the euro, the Japanese yen, I do think that there's a certain amount of investors in those countries that have said, hey, listen, let me maybe go into, Bitcoin as protection in this wilder currency Forex market. And then I think bottom line is there's this weird calm in the Bitcoin and the crypto market, as everyone's waiting for the judge's decision on Ripple, right, is coming up later this month, I think. And then also just any sort of regulation from Gary Gensler. And I think that once the midterms are over, that's where you could see that kind of clarification on the crypto market. So I think it's a combination of a lot of things that are keeping it a little bit more sideways chopping. So in the statement itself, there wasn't, but it's very possible he does the Q&A at the press conference. And I think that would be a very normal, and I hope one of the interviewees, the reporters, does ask that question, because that's, to me, that's one of the more important reasons for the Fed to kind of stop hiking, is that if they hike too much more, the dollar is going to strengthen. And at some point, you will see a catastrophic credit collapse, a money collapse in some of these other countries. Yeah, there's no doubt. I mean, anytime you end up making the banks hold on to more money and not able to lend it out, that will have the impact of meaning less money in the system, which inevitably would bring down inflation. I think the Fed is trying to do it from the opposite side, right? By raising interest rates so much, essentially it's making the consumer. So you're talking from the banking side, but by raising interest rates, you're making the consumer basically say, I can't afford a mortgage payment with 7% interest or 7.5% interest. And so it kind of works in that side of the equation. But I agree that you could tackle it on that side. Absolutely. Yeah, so I still think that we have some upside. And again, we still have this beautiful bullish channel or pattern forming right here. We broke out of this little wedge pattern down here. So I do think that Bitcoin is kind of coiled here to make a move up. Now, whether it goes to 22.5, which would be this upsloping kind of channel line here, well, that's 25, right? Or to 22.5, which is right here. That's the question. And I don't know how much fuel is in the tank on Bitcoin. I think a lot is going to have to do with, what the Fed ends up doing. How does the dollar react? If we actually see the dollar starting to weaken, then that's very, very bullish for cryptocurrency and specifically Bitcoin.
It's
Yeah.
really crazy,
And I think
man.
a couple things that are worth noting here is, so initially when the Fed changed their verbiage in the statement, we saw the dollar collapse really quickly. And then during the press conference, we've seen the dollar roar back. And what's interesting here is that the market had pointed expectations before this meeting. And basically we're saying we expect by a certain point in 2023 to have a Fed funds rate of 5%. And essentially we're still at that point, right? We're still at this, we're basically trading where the dollar was prior, which tells us that, again, the market, even after this whipsaw, we're kind of back to where we started, where the Fed hasn't pivoted enough to create the dollar to weaken significantly. And again, we're seeing the rally back that's telling us that. So again, I think that's the key takeaway, at least as of now. The dollar's not weakening. So in other words, the Fed is still remaining pretty hawkish here. Yeah, this is the 10-minute DXY chart, right? Exactly. So we can see that, again, when the Fed came out, the DXY on the 10-minute chart collapsed, then ripped up here, and that's when the market and Bitcoin reversed their moves, right? As soon as the dollar started to gain that traction, we saw Bitcoin reversing. No, I agree. At some point, I mean, whether it's something that breaks because of the strength in the dollar and what the Fed's doing, whether it's something geopolitical, it's inevitable that we will have it. I mean, we saw it with COVID, when COVID emerged and the markets collapsed. Something will happen. And the biggest scary thing here is that everything that this market does, and we're talking all asset classes, is relying on the Fed. We've become basically attached like a drug dealer with a drug addict, right? And the Fed is the drug dealer and the markets are the drug addict. And without the Fed, you see what the asset prices are doing. They're collapsing. With the Fed, the high can go on. Right below this resistance here. So the key is, if we can make a good enough resistance kind of or consolidation pattern, and you pop and you get through that line, you actually have good upside to maybe 2000. And I think it's very possible that if Bitcoin goes to 25 or so, at least you see 2000 on Ethereum in the near term. So I think, again, that would be kind of the target. There's even a small chance 2300 could be seen, which would be this kind of major pivot area right in here. So again, those are the two levels I'm watching. But number one, we got to break through this downsloping resistance level. Yeah, right now I am. Although, I have to, as a trader, every time the Fed comes out with anything, we got to kind of reevaluate. Right now, the charts are still holding true. But if the dollar starts to rip too much more here, and you can see the dollar's now making short-term highs here, we're almost taking out the highs from before the Fed. In fact, we are. If the dollar really continues to strengthen, let's say for the next 2 weeks, then the crypto market has no shot, of making a breakout. So it really becomes really influential on this in terms of what the market is doing and what the Fed is causing in the dollar. And this is, I'm going to look at the S&P, but I've got to imagine the S&P is getting crushed. Yep, S&P now down over 1% on the day.
Okay.
And let's see if Bitcoin is selling as well here, but I would assume it is. But again, Bitcoin, I got to say, it's holding strong. Considering it's still kind of right around those levels from where it started earlier in the day. It's just been going sideways. So, it seems like Bitcoin doesn't get a huge move up when the Fed was positive or when the markets reacted. But at the same time, it's not getting hit too badly here either on the way down, although it's starting to inch a little bit more.